Looking ahead, domestic factors such as healthy agricultural prospects, continued impact of GST rationalization, benign inflation, healthy balance sheets of corporates and financial institutions, congenial monetary and financial conditions should continue to support economic activity. Continuing reform initiatives, moreover, would further facilitate growth. On the external front, congenial monetary and financial conditions remain strong, should continue while merchandise economic activity face some headwinds. Continuing reform initiatives, external uncertainty further facilitates downside risks to the outlook. On the external front, while congenial monetary and financial conditions remain strong and investment while merchandise economic activity the government is undertaking continuing reform initiatives, external uncertainty further facilitates upside potential outlook. On the external front, congenial monetary and financial conditions remain strong and investment while merchandise economic activity the government is undertaking continuing reform initiatives, external uncertainty further facilitates upside potential outlook. On the external while congenial monetary and financial conditions remain strong and investment while real GDP merchandise economic next year the government is undertaking continuing reform initiatives, external uncertainty further facilitates upside potential. The risks are external while congenial monetary and financial conditions remain strong and investment while real merchandise economic next year the government is also undertaking continuing reform initiatives, external uncertainty further facilitates upside potential. The risks are external while congenial monetary and conditions remain strong and investment while real merchandise economic next year the government is also undertaking continuing reform initiatives, external uncertainty further facilitates upside. The risks are external while congenial monetary and continued price control real merchandise economic next year the government is also undertaking continuing reform initiatives, external uncertainty further facilitates upside. The risks are external while continued price control real merchandise economic next year the government is also undertaking continuing reform initiatives, external uncertainty further facilitates upside. The risks are external while continued price control real merchandise economic next year the government is also undertaking continuing reform initiatives, external uncertainty further facilitates upside. The risks are external while continued price control real merchandise economic next year the government is also undertaking continuing reform initiatives, external uncertainty further facilitates upside. The risks are external while continued price control real merchandise economic next year the government is also undertaking continuing reform initiatives, external uncertainty further facilitates upside. The risks are respectively. I may, however, add that the underlying inflation pressures are even lower as the impact of increase in price of precious metals is about 50 basis points. The risks are evenly balanced. I will now draw your attention to the external sector. India's current account deficit moderated from 2.2% of GDP in Q2 last year to 1.3%. This is a decrease of about 0.9% in Q2 this year on account of robust services exports, which continue to do well, and strong remittances. In October 2025, merchandise exports contracted YOY, whereas merchandise imports continued to increase for the second consecutive month. This resulted in widening of the trade deficit. Healthy services exports coupled with strong remittance receipts are, however, expected to keep our current account deficit for this year modest. On the external financing side, gross FDI to India increased at a robust pace during the first half of the year. Net FDI too increased significantly due to a decline in repatriation despite a rise in outward FDI. FPI to India recorded net outflows of 0.7 billion US dollars this year so far, basis figures till December 3, primarily due to outflows in the equity segment. Flows under ECB and non-resident deposit accounts moderated as compared to last year. As on November 28, 2025, India's forex reserves stood at a healthy 686 billion US dollars. This provides robust import cover of more than 11 months. Overall, India's external sector remains resilient. We are confident of meeting our external financing requirements comfortably. I will now talk about the liquidity and financial market conditions. System liquidity, as measured by the net position under the LAF, stood at an average surplus of 1.5 lakh crore rupees for the period since the MPC last met in October. Money market rates have remained largely aligned to the policy repo rate, which was 5.5%, amidst comfortable liquidity conditions. G-Sec yields have remained range-bound since the last policy. In response to the cumulative 100 basis points cut in the policy repo rate, the weighted average lending rate of scheduled commercial banks declined by 69 basis points for fresh rupee loans during this period. In fact, the interest rate effect is even more at 78 basis points. The moderation in the weighted average lending rate of outstanding rupee loans has been to the extent of 63 basis points, which again is very satisfactory. The transmission has been very broad-based across sectors. On the deposit side, the weighted average domestic term deposit rate on fresh deposits has declined by 105 basis points, while that on outstanding deposits has softened by 32 basis points over the same period. I would like to take this opportunity to reiterate that we are committed to provide sufficient durable liquidity to the banking system. We continuously assess the durable liquidity requirements of the banking system, which happens due to changes in currency in circulation, forex operations, and reserves maintenance. Going forward too, we shall continue to do so. And after reviewing the liquidity situation and the outlook, as mentioned earlier, we have decided to conduct OMO purchases of government securities amounting to 1 lakh crore rupees in this month. Moreover, we will also be conducting a 3-year dollar rupee buy-sell swaps this month. The details will be notified separately later today. We are hopeful that these measures will ensure adequate durable liquidity in the system and further facilitate monetary transmission. I would also like to clarify that injection or absorption of liquidity through purchase or sale of government securities under OMOs and that through operations under the LAF, which is VRR or VRRR, which are of short-term duration, serve very different purposes. While the objective of purchase and sale under OMO is to provide or absorb durable liquidity, the purpose, which is long-term, and the purpose of repo operations is to manage transient liquidity, which is of very short nature, so as to align the operating target, which for us is the weighted average call rate or the Walker, to the policy repo rate, which now stands reduced to 5.25%. So it is quite possible that on the one hand, we inject durable liquidity through purchase of government securities under OMO. while simultaneously withdrawing transient liquidity through a VRRR operation on the other hand. I would further like to reiterate that the primary instrument of monetary policy is the policy repo rate. It is expected that changes in the short-term interest rates will transmit to various long-term rates. At the same time, the primary purpose of OMOs is to provide sufficient liquidity and not to directly influence GSEC yields. I will now talk about financial stability. The system level financial parameters related to capital adequacy, liquidity, asset quality, and profitability of the scheduled commercial banks continue to remain robust. Similarly, the system level parameters of NBFCs too are sound. They have adequate capital position and they have improved gross NPAs. The total flow of resources to the commercial sector has been strengthened. This is bolstered by greater non-bank intermediation. In the current financial year so far, the total flow of resources was more than 20 lakh crore rupees, precisely 20.1 lakh crore rupees. This is against 16.5 lakh crore rupees in the corresponding period of the previous year. Outstanding credit from bank and non-bank sources put together increased by 13% year on year. Bank credit too has seen an uptick. The latest number that we have is 11.4%. Sector-wise data reveals that growth was supported by sustained lending in retail and service sector segments. Industrial credit growth also firmed up, aided by buoyant credit flow to the MSMEs. Large industries too recorded an improvement in credit growth. Now, before I conclude, I have one additional measure to announce. You are all aware we have been focusing on improving customer services. We have taken a large number of measures in this regard. Re-KYC, financial inclusion, Aapki Punji, Aapka Adhikar campaigns are some of the initiatives taken in association with other stakeholders, including Government of India, Ministry of Finance. Earlier in the year, we reviewed our Citizens Charter too. We made applications for all our services online. We have the Prabha portal. Some 204 services are online over there. We are publishing the summary of our monthly disposal and pendency of various applications on the first of every month for the last 3-4 months now. And I'm happy to note that more than 99.8% of the applications are disposed of within the stipulated timelines given in the Citizens Charter. However, in the recent past, as a result of inter alia receipt of a large number of grievances, pendency with the RBI Ombudsman has increased. I therefore exhort all regulated entities to kindly keep customers central in their policies and operations, improve customer service, and reduce grievances. Further, in this regard, we propose to hold a 2-month campaign from 1st January next year with an aim to resolve all grievances pending with the Ombudsman, with the RBI Ombudsman for more than a month. I elicit the support of all regulated entities in this endeavor. Let me now conclude. Despite an unfavorable and challenging external environment, the Indian economy has shown remarkable resilience. It is poised to register high growth. The headroom provided by the inflation outlook has allowed us to remain growth supportive. We will continue to meet the productive requirements of the economy in a proactive manner while ensuring macroeconomic stability. Thank you, Namaskar, and Jai Hind.
When you have the perfect response in your head, but your fingers just can't keep up. We've all been there. Typing, deleting, retyping. Now I use Whisperflow. I just think out loud and it creates perfect formatted text on any app or website. Whisperflow understood what I was trying to say and gave me the exact output I wanted. Check out the difference between this same sentence being dictated into Siri versus Whisperflow. Let's meet at 12 p.m. at Joe's Pizza. Wait, no, actually I can't do 12, so let's do 12:30. And instead of Joe's, let's go to Kelly's Diner. Whisperflow understood what I was trying to say and gave me the exact output I wanted. For longer texts like this email, it even formats it professionally so it's ready to go with no editing. So much faster than typing. Whether you're writing in Gmail, ChatGPT, iMessage, WhatsApp, Slack, Cursor, or anywhere else, break free from your keyboard. Do you know how much time you'll save if you quadruple your typing speed? Try Whisperflow for free on desktop and mobile.
Cheap hotel rates, cheap travel deals, cheap flights, and more. Go cheaper with Agoda.
Ever